Ladies and gentlemen, listen to this really interesting statement that the Palantir CTO brings on Yahoo Finance today.
Well, I think it first starts with acknowledging that we're in this state of undeclared emergency. You know, we have North Korea firing off ballistic missiles, North Korean soldiers now in the front with Ukraine. We've had a pogrom in Israel. We have the Russians providing targeting information to the Houthis to hold 15% of world trade hostage. You know, what more would we have to see to actually kind of mobilize now? And so looking at that, you know, we have a couple weeks of weapons on hand for the China fight. We see that Ukraine expended 10 years of production in 10 weeks. And so are we ready? Are we doing everything? And when I look back at our history, how did we win World War II? How did we win the Cold War? We didn't have a defense industrial base. We had an American industrial base. 94% of spending on major weapon systems did not go to defense companies. It went to dual purpose companies. Chrysler made, in my lifetime, Chrysler made cars and missiles. Ford made satellites until 1990. General Mills, the cereal company, made artillery. The very laydown of our economy was so different. Every car, camera, and cereal box you bought enhanced our national security. And unfortunately, that's what China's doing to us. Only 30% of their defense company revenue even comes from the PLA. The rest comes from us buying cheap knickknacks on Amazon.
Wow, that's very interesting to hear, especially coming from the Palantir CTO, talking about that a lot of the companies in America were dual purpose companies, that investing and buying their products actually helped our defense mechanisms and operations here in the US. And what's really interesting in terms of what Palantir, I believe, is doing is trying to bridge the gap with that objective, trying to bring more utility with AI and really incorporating that into the defense system. So investing in Palantir is not just investing to AI, but also investing into defense, and basically saying that a lot more companies, I think, need to get back to this dual purpose groundwork in order to stay competitive compared to some of the other countries out there, like he's mentioned, China, that is utilizing this type of workflow right now in this type of streamlined pipelining process. So interesting. What do you think about that down in the comments? We're going to be talking about what's happening in the market today. Major tech sell-off. We see one of the worst days for the broader market in the last many weeks. We see Palantir coming down about 5% today, still holding above 40, doing fairly well. Before you guys get too far, thank you. We pushed over 17,000 subscribers. Let's keep it going on the road to 18. Hit that like button, subscribe for daily videos, and of course, not a financial advisor, collecting all the data and dispatching it to you. We'll pop it up here. Palantir closing at 41.56, and we see a lot of the market that is coming down. Now, we have a lot of volatility, a lot of big tech stocks released their earnings today. We're talking about Meta. We're talking about Microsoft that actually slipped in terms of price action, bringing down a general market basis. Now, looking at the price for Palantir at 41.56, we talked about this yesterday, and this is being kind of coupled and put on with a lot of bearish perspective that is starting to hit streamline right now, on top of Alex Karp here that sold $254 million worth of shares at 45 bucks. Now, him taking advantage of the top, that's not necessarily a bad thing. I saw that down in the comments. I agree with that. However, this brings uncertainty coming into especially earnings next week. So let's break that down. Palantir does have support right here at the 41 and especially at the 40 that it could be testing if we continue to see a decrease in the broader market. We have a very important macroeconomic piece of data that will be released tomorrow that we do need to go over. Now, talking about Morningstar, they also released here a statement, and a lot of people look at Morningstar. They get a lot of eyeballs on them. Talking about going into earnings here, they give a forecast talking about, is Palantir a buy, a sell, or fairly valued? Now, we know Palantir trades at a high valuation. That is being more of a concern that's being addressed right now by the media. You can see the overall kind of momentum in psychology that is starting to connect those pieces together. Because remember, we said when Palantir was really accelerating in price, the disconnect from valuation, that was apparent. We saw that, especially with the S&P 500 inclusion. Now, what Morningstar comes out here is saying with a fair value of $19, giving it a 1-star, economic moat, narrow, uncertainty rating, very high. This is all tied to its valuation. Talking about what to watch for in Palantir Q3 earnings. That's next week now. November 4th, post-market, right before the election. Now, I know Palantir has had remarkable quarters for the previous few quarters. And talking about here, similarly, they expect an uptick in customers as companies are continuing to onboard at Palantir due to the leverage and bringing utility with artificial intelligence. We've seen this in the headlines from the commercial side, from the governmental side, the perspective on commercial customer growth. I think we're going to see that reported in the earnings. They're going to be looking at commercial clients in particular as they would be the perfect target audience. Now, when a stock trades as a multiple high, Morningstar talks about here, it's priced for perfection in terms of numbers. This boils down to really big things that a lot of investors are going to be looking at. That is actually going to be the quarterly results. How do they compare to last quarter? Guidance for the upcoming quarter. What are the expectations in the future like? And also, what's the overall management commentary going to look like on the actual business pipeline? Now, specific factors as remaining deals, talking here, looking at where is the stock trading. And it seems fair to say across the board that we know that this is not fairly valued right now. That's where Morningstar does give it a 1-star rating, believing Palantir is significantly overvalued. We know that. We've seen that for a long time. But however, them coming out and highlighting it is really starting, I think, to change the momentum in terms of perspective. And this is where we could see Palantir that continues to see a little bit of selling pressure. Now, coming down, any type of correction for people waiting on the sidelines to get in at entry points, hey, that is just a clearance sale for people that are waiting. And basically, everybody's almost up on Palantir right now. It is trading at record highs. One important thing that I stay very bullish on Palantir is its financial strength. We saw its position has always been very healthy, ending in 2023 for its fiscal year with $3.7 billion in cash and liquid investments with, guess what, no debt. So when times get tough, if Palantir has any rough, bumps in the road, they have an enormous amount of cash to sit back and rely on. When it rains, it pours. Palantir is ready for that storm. And that's where we talk about here. They give a very high risk and uncertainty grade for Palantir. And I can see why. We've seen it. But in terms of a high growth stock, in terms of high risk, high reward, that's just where Palantir is sitting at right now, and especially at record highs. They have strong secular tailwinds. I would agree with what the bulls are saying here. Lots of targeting and demand and exponential growth for commercial and governmental side of things. And what the bears are saying here, of course, is talking about competition from years ahead. Listen, Palantir has been very creative and has developed these different types of software that it has offered for years. And AIP, even though that's more relatively newer, all of the ideology and the development of the software has happened years ago before AI even took storm. They're ahead of the game. And that's why I think we've even seen Alex Karp come out and say it, that they don't really need to be 100% competitive because they invented a lot of these products. And now a lot of competitors don't know how to do it in the same way. And I can see where he's coming from. So basically, should Palantir be a part of your portfolio ahead of Q3 earnings? Of course, that is for you to decide. There's going to be a lot of volatility coming up here, a lot of movements, and especially with what's happening in the stock market. We see Meta, the bird of Meta expectations right here. Major market swing. S&P comes down 1.9%. Its worst day in 8 weeks. Now, Microsoft actually reported a bigger profit growth for the latest quarter than analysts had expected, and its revenue also topped forecasts. However, nonetheless, we saw a 6% dip. As investors and analysts, they scored for any possible disappointments. Also, on top of that, you see Meta coming in here, likewise, giving a good profit report. As of Microsoft, they also fell because investors didn't like their significant acceleration in terms of spending next year to developing AI. It fell 4.1%. So even though these companies, big tech companies, came in with positive earnings reports, we are seeing sell-offs. And that's why our people predicting, hey, is this the top? We see Amazon, Apple coming here, falling 3.4%. La-da-da-da, NVIDIA coming down here, a big tumble across the board. And this is why I think NVIDIA had a big heavy weight on the broader market coming down. Now, with what we've seen here, Treasury yields actually edged lower following mixed set of reports on the U.S. economy. Big piece of the data that we got was a measure of inflation. The PCE data that the Federal Reserve likes to use actually slowed down to 2.1% in September from 2.3%. This is great because this is almost back to the Fed's 2% target, which keeps that probability high that we're still going to see a 25 basis point cut. Now, when is that going to be happening, and why tomorrow could even be a big day for the market and for the election? One of the big things is that we have the Federal Reserve kicking off that meeting ending on November 7th, right after the election. And looking here, a big thing that's coming out tomorrow is the non-farm payroll, or the jobs report. This is also going to be a big indicator on U.S. labor market growth for the prior month and showing how many jobs the U.S. economy added, the unemployment rate, and other important metrics with wage growth. So with this being coupled with an election, in addition to PCE data, in addition to big tech stocks that are selling off, things can swing either in any type of direction. I think right now we're going to continue, personally, in my opinion, to continue to see a little bit of a pullback. Reason why is just because we just see a lot of momentum in sentiment, basically, that is looking towards selling pressure. We'll see what happens, though, if we see any flip. And if we do, hey, that's good. We'll see what the jobs report says. Peace out. Take care. Hope you guys enjoyed the video, and I'll catch you guys later.